on the Singapore bank and also all the economics and all the stocks markets. So the change in US interest rates has a very important role. So when the US cut its rate it will further affect the exchange rate, capital flow, interest rate difference, and broader economic conditions. So before looking at the fundamentals on the three of the banks, I think we need to have a clear picture on how the interest rate can affect the bank. So right now, US is going to expecting to cut the rate around 1 to 2 times, which is a good news for Singapore banks in the short terms. But in a long-term basis, right, it might not favor the bank as it will affect the profitabilities of the bank. We have seen the stocks price for DBS, UOB, and OCBC have go up 30% or more this year. So one of the reasons because of the high interest rate environment, which has increased the Singapore bank's profitabilities. So later I will show you the financial ratios for the banks. But before that, I think a lot of people here they always look at bank, but they don't know what ratio they need to look at. Today I will talk about more on the key ratios for the bank first before you get into all the fundamental. So learn what you need to know first. Okay. So this the first key financial ratio will be net interest margin. So what is net interest margin? For a bank, a high net interest margin indicate that a bank is investing its resources in a way that return more income than its expenses. So the net interest margin reflect the difference between the banks borrow money from us and loan it out. So basically is the difference between how the percentage, the interest they lend from the public and they borrow out. So this is how they earn money. So if bank have a higher net interest margin, it means they have more probabilities of gaining profits. Okay. So this is the one of the most important financial ratio you need to look at when you are looking at the fundamental of a bank. Then the second one is non-performing loans to total loan ratio. So it's like the name. So non-performing loans to total loan ratio will be ratio means that the bank is at a greater risk of loss if does not cover the own loan. So how many people will not pay their loan? The percentage of people don't pay the loan. So this basically is calculating the risk for the bank, whether they can bankrupt or not. So looking at this, of course, the lower the better lah for the non-interest, non-performing loan. So if you look at the bank have very low not performing loans, meaning that uh the risk for the bank is very low. Okay. So this one, if we look at others bank in Singapore, actually non-performing loan is quite low lah. So technically, theoretically, Singapore bank is more safer than others bank. Okay, others country bank. Okay. Next will be the common equity tier one. So we name it as a tier CET1. So this is capital that are able to absorb unexpected losses that arise during an emergency situation. So CET1 is the highest qualities of regulatory capitals as it absorbs loss immediately when they occurs. According to the bank international settlements, a bank CET capital must include a minimum ratio of 4.5%. So you can think it as a emergency fund for the bank lah. So if you have a higher CET1 means you have more emergency fund for the bank. So the higher the better. But of course, you don't want to have a bank have very high CET because they need to have their money to uh invest. So this one have to be quite a good this a percentage, but not a very high percentage. So for the minimum requirement is 4.5, but in Singapore bank is around 15%. So it's looking quite good for Singapore bank. And last ratio is the CASA ratio. So CASA ratio refer to the current account and saving account. So bank offer non-interest on current account and lower interest on the saving account than other uh, fixed deposit account. Because of the low funding cost in this account, the bank has a good source of money to support other activity. So having a high CASA ratio means you having excellence, a lower rate to borrow money from the public. So a com- uh, a bank that have higher CASA ratio means a lot of people are using the bank actually to do a daily transaction. Like I think in Singapore, DBS, more of the people use DBS because everywhere have DBS and the ATM is very convenient. So the CASA ratio for DBS definitely will be higher than other banks like OCBC or UOB. So later on, I will use all this ratio to determine whether bank is in a shape or not, or is there any risk on this by looking at CASA ratio, looking at CET1, looking at non-performing loan and the net interest margin to determine is it the bank, how is it performing. So this table right here, I retrieved from Bloomberg is a annually statistic. So you will see 2019 to 2023. So we don't have 2024 because we only get the data next year or end of the year. So right now, the latest data is until 2023. So for this data, we can determine for the long term for the bank, but not the short term, okay? And we can know how actually DBS, OCBC, UOB is performing over the years. So for people who like to say they are long-term investing, they are value investing, then all this data is very important. If you need this uh data, you may join in our Telegram later. I will be sharing this data here. And maybe if everyone like it, I will constantly update this annually lah. Okay. Okay, maybe I can see anyone want it. Comment I want, okay? If more than 10, then I will try to do it. Okay. Look like nobody want. Minghan. Okay, never mind. Let us continue with the data first. So as what I say, net interest income here is the revenue generating from the bank. Okay, thank you for everyone for the comment. Okay, yes. If you want, first you need to join the Telegram channel, yeah, later. Okay, so for me, when I look at the fundamental of stocks, I will always look at the revenue first because the whole thing for the company to grow is the revenue. So net income, let's look at it. And obviously DBS will be the highest, and we look at the growth is actually 25% from 2022 to 2023. So you can see three of the bank, the income is growing quite good at 25% rate. So you can expect that actually this year the stock will not be uh going down or will be going up a lot. By looking at the annual report itself, you'll see actually the stocks is going up because of the income, because we know that the bank actually is earning, yeah, instead of losing money, they are earning a lot from 2023. So you can also see that the stocks for the bank actually is going up a lot recently. Of course, there's a lot of factor that affect the stock's price, but one of it will be the fundamental, of course. So during 2023, we know that actually is a high interest rate environment. So net interest income for the bank is actually very good, performing very well. You can see DBS is growing 25%, UOB is growing 16%, OCBC is growing 25%. So if comparing, I think DBS and OCBC is performing quite well. Of course, UOB is okay, but lose to these two of the bank lah. And right now, as what I say, interest rate is actually sorry. Okay, sorry. Interest rate is at going to lower at the US Federal Reserve is going to cut their rate. So we expect that next year the environment will not be so at a high interest rate environment. That's why we will see net interest income may be going down next year. So what I like to focus will be the non-interest income because we know that next year the Fed is going to cut their rate, then the net interest income definitely will be affected by that. So if you have a strong non-interest income, then I definitely will look at it and I maybe will like it more. So looking at the annual report, we can see that DBS growing 18%, UOB is growing 32%, and OCBC only increased 7%. So by looking at the financial chart, right, financial report, right, I would like UOB more because the non-interest income is growing 32% last year. So I expect if this year UOB is growing stably 32%, then UOB will be one of my favorite right now. And in the same time, maybe OCBC is not so, as just now I see a lot of people talking about OCBC, right? And DBS, 18% is still quite okay, given that the numbers of DBS is quite big. And let us look at the net interest margin. So we can see that 2023, the net interest margin for three of the bank go up to 2%, which I think is quite reasonable because of the high interest rate environment. So nothing we can talk about it because we know in the future it might be going down. So we may not see so high net interest margin. So looking at cost to income, actually OCBC have a quite good ratio. So their cost actually is lower comparing with two of it, two of others bank. And let us look at the CASA ratio. CASA ratio, we can see DBS is having the highest. And if you notice that actually during COVID time, 2020 and 2021, DBS has the highest CASA ratio because we know that actually the most popular bank in Singapore is DBS. So a lot of people will put money inside the bank, like current account or saving account in DBS because most of people use that. So you will see comparing with others two bank, the CASA ratio for DBS is actually higher. So this is quite reasonable lah. So when we look at DBS as higher CASA ratio, it's not really uh impress me or anything because we know that DBS is the most popular bank in Singapore. And looking at the loan to deposit ratio, actually three of the bank looking quite good. So nothing much we can see. But for non-performing loans, OCBC actually is quite outstanding by having one non-performing loan percentage. And DBS, of course. So looking at it, actually, OCBC performing quite well in terms of the risk part, like non-performing loans is very good. And looking at CET1, OCBC also quite good at 2023, cost to income, all that. So for right now, this just a reference because later on we will look at the quarterly report because for annually we only can know the whole year, right? It's more to long term, but short term maybe we'll look at the quarterly result and then we will look at it later. Okay, so maybe I will go into the DBS financial analysis. I will go in depth on the quarterly result for DBS, OCBC, and UOB. So I will skim through the quarterly result lah. So DBS net profit for the first quarter reached 2.96 billion, marking a significant achievement with a ROE of 19.4%. So looking at this actually is very good. And the stock is going up a lot since the final quarterly result. So this is one of the result, of course. So the bank net interest income is expand to 2.77% to the high interest rate. Thanks for the high interest rate. Of course, like I say, you wouldn't expect it for the next year. In the future, it may drop down. So this 2.77% may not be sustained. Okay. So looking at the net income close to 1 billions, marked for the first time, propelled by a strong market sentiment and expanded asset under management space in wealth management fees. So additionally, higher spending result in increased card fees. Both increase were further boosted by base effect, including the consolidations of City Taiwan. So looking at the bank first quarterly net profit saw a 24% increase compared with the last quarter. So actually, DBS is also performing very well in this first quarter. DBS maintained a robust balance sheet with the non-performing loans at 1.1% and CET is around 14.7%, which is really good, reflecting is a strong performance DBS declared at the first quarter. Also, one of the key thing we look at, most of the people buying DBS, UOB, and OCBC is looking for the dividend, right? So DBS right now, the dividend is giving up quite a lot. Uh, this year already give two time and also one bonus shares. So this is one of the good news for a lot of long-term investor, passive income investor. So one of these reason, I think the stock also boost up a lot when they announce the dividends. Okay. So when we look at the dividend right now, looking at DBS lah, the yield for DBS is around, I think fluctuated between 3.5 to 5%, which is very good. And the payout ratio always is remain at lower 50%. But from the CEO, they actually announced that they will try to give more dividends. The payout ratio may be go up more than 50%. So this may be a good news for a lot of people who like dividends. Okay. So we can see that this year they are giving two times already. One declare on April, one declare on May, and they give us a bonus shares also 10 to 1. So it's very juicy return from DBS if you have invested uh from the start of the year. If you invest DBS, you gain the capital returns and also the dividend itself. Okay. And looking at the quarterly result, DBS is actually performing very well, which we see that DBS price is pumping a lot. Of course, today I think this few days going down a little bit, but still is already break through the history high. Okay. So congrats to all the investors who hold DBS and all the other two banks. So let us look at the quarter result for UOB, okay? So UOB has announced its quarter result, reporting a robust performance also. UOB posts a net profit of 1.6 billion, marking a 5% increase for quarterly. So compared with DBS, actually, UOB is still not that good, of course. But compared to itself, actually, the quarterly result is quite good already. So the growth was primarily driven by the higher net fees income and recording tradings and investments incomes. So on a year-on-year basis, the core net profit remains stable, showcase the group resilience. So looking at the year-on-year, actually, is not really good. It's going down a little bit. So UOB, in terms of the revenue generating in revenue, maybe is not that good compared with DBS. So the UOB other non-interest income saw a 3% year-on-year increase, reaching 581 million. So this was lead to a record tradings and investment income, with customer-related treasury income hitting a new high due to increase of retail bond sales and stocks, strong hedging demand. And looking at the CET1 and non-performing loan actually is still remaining a very good ratio. Okay. So UOB balance sheet remain robust lah. But compared with DBS actually UOB is lose a little bit on that in terms of revenue, in terms of net interest margin, non-interest margin, all that. Okay. So maybe we can look into the dividend. So UOB may they also say they will maintain their payout ratio below 50%. So maybe compared with DBS, UOB also not that good in terms of their payout ratio. But of course, their DBS dividend yield will be around 3.5 to 5% lah. Of course, we looking at 2023, they are giving around 5.98%. But this one definitely it will not sustain. So we will still look into the average. So it's around 4% to 4.5% lah for the dividend. But looking at UOB and DBS and also OCBC, UOB actually the payout ratio, they already claim that they won't exceed 50% payout. So people who like dividend payout, maybe UOB is a little bit uh not suitable. Okay. So let us move to OCBC quarterly result. So OCBC result a 22% increase in group net profit to 1.98 billion for the first quarter. So driven by record total income, control costs, and lower allowance. So net interest income was around 2.44 billion. So 1% below the previous quarter record due to a short quarter. So non-interest income rebound at 47%, which is very impressive. So the non-interest income growth 40% for OCBC. The net fee incomes go up 4%. So all this non-interest income is driven by the wealth management, brokerage, fund management, and investment bank fees. So one of the main factor because the net trading income surged 67% to the new high with the record customer flow treasury income and improved non-customer flow treasury. So actually the non-interest income for the OCBC is very good because of all the trading, all the wealth management supporting it. So supported by the better investment performance and improved claim experience, the wealth management actually reached a new record of 1.29%, which is 33% above the previous quarter. So we can see the non-interest income for OCBC is actually growing a lot compared with UOB and DBS. So this is one of the thing I like a lot because as I said that uh, net interest income will go down in the future. So for next year in the future, the bank will really rely on their non-interest income to power up the net interest income. So if they have a good wealth management, they have a good investment team, then it will be something I really like to look at it. And I'm looking forward for it. So on OCBC dividend, actually both three bank actually the dividend payout is quite similar, we can say. Payout ratio is around 50%. But comparing DBS, UOB, OCBC, I think UOB will be the worst, not the worst, okay, the normal one because they already say that they will cap at around 50%. But DBS, OCBC actually they say that they will go up, increase their payout ratio up to 50% plus. Okay. So actually we can estimate OCBC and DBS have more uh dividend yield comparing with UOB. Okay. So I have made a chart, a, a table showing the quarterly result for these three banks, Q3, Q4, and Q1 this year. And we can clearly see what is happening right now. So for short-term trader, short-term fundamentalists, of course, if you want to enter the market or exit the market, of course, need to look at technical analysis. But for some reason, we also need to know how is their performance, how is their performance. Net interest income for DBS, for UOB, OCBC is not that good because I think quarter four, quarter three is already growing a lot. So now it's still not growing so much at this quarter, which I think is reasonable because quarter one usually will be a low season for the bank. Usually people like to buy spending on Q4, right? Yep. But the key thing is non-interest income. So when we look at non-interest income, UOB grow 15%. If we look individually on UOB, it might look very good. But if we compare UOB, DBS, and OCBC, OCBC definitely is the winner, growing 49%. So this is one thing I really like OCBC for now. And if you ask me, definitely I would choose OCBC because of the non-interest income. Okay, so for net interest income, it maintained around 2%. So I think it's three of the bank is still okay. But OCBC actually growing a lot, 2.27. So it's quite good also. Cost to income, 37 for DBS and OCBC. Okay. And non-performing loans, as always OCBC at 1% is very good. DBS also very good. CET level also OCBC is winning. So if if I look at the annual report and quarterly reports on three of the bank, uh, definitely I will like OCBC. But DBS also is a good choice. So for people who like to is more conservative, they don't like volatility. DBS actually is a very good choice. It won't go very high, but also won't drop below the expectation. So DBS actually is quite stable in terms of all the changes of the net interest income, non-interest income, net interest margin, all that. So if you like lesser volatility, definitely DBS is something you are looking at. But if you are more aggressive, I think OCBC is something we are looking into right now because looking at the ratio, net interest income, non-interest income growing to 49% is really good. And I think they have done a lot of promotions right now and also wealth management and their investment is very successful. That's why the non-interest income is going up a lot this quarter. And we know that actually non-interest income will be the uh key revenue for the bank for the future. So OCBC is something I really like right now in terms of their profit generating, in terms of their risk management on the cost to income, non-performing loans, CT1. So all of this ratio really give me a very confident financial result. Okay, so back to the topic to what is do is it the time to buy right now? For me, looking into all this fundamental is not enough for me to like determine whether I want to buy it right now or buy it tomorrow or buy it when to buy it lah. Okay. So this one we will give it to Minghan, okay? Because Minghan will be the expert of the technical analysis and he will talk about why do you buy at this time and why do you not buy at this time. So he will share the insight out of all the technical analysis. So let me see whether you guys are excited about it. comment on the chat first, okay? Before we invite him to talk about it, okay? Let me see. Anyone want to listen to what Minghan sharing? Comment Minghan and Hirsch, okay? Let's get Minghan some support, okay? So before that, of course, if you need this slide, if you need the data, okay, you can join our Telegram channel, okay? We will share all the information there, and we will constantly update Singapore Bank. Okay. Thank you everyone for supporting Minghan, okay? So right now, I will pass it to Minghan, okay?
Hey, thanks, Jack. Hello, everyone. Thank you for joining us. So, just like to find out from you guys, if you like what Jack shared, you can join us in our Telegram. So, let me know if you can see my Telegram screenshot by typing a T so that I know that you are seeing the correct screen. Okay, thank you, Ben Tay King. Thank you, Mr. Tay. Jack. Okay, great. So this is our Telegram. We have economic data. We also have some stocks analysis. If you like, you can join us. And just now, Jack already commit to update you on the banks, right? Every earnings season. So before we start, just want to find out from you guys, how many of you are already investing in banks? If you are already doing so, can you type a letter Y so that I know that the audience profile tonight? So some parts I can go faster because I understand that we book you until 8:30 only. Okay, thank you. How many of you haven't started but wants to start? Okay, I see some of you already putting it letter N. Okay, thank you, Charlotte. Thank you, Jean. Thank you. Thank you, Jane. All right. So today I'll just go through 3 points, and some parts I will move on a bit faster because of time. So the 3 points are what happened during the DBS consolidation. There is some consolidation that I'd like to share with you, some free information that you can take back and use it for yourself in the future. And number two, a visual way to value the banks with technical analysis plus fundamental analysis. And last but not least, plan. What's the plan? So how many of you agree that if you fail to plan, you plan to fail? So if you agree with that, can you type plan so that I know that we are all on the same page? Otherwise, I'm not very sure why you're here tonight. Yes, that's right. We need a plan. Thank you, Shuning. Thank you, Charlotte. So moving on. So there was a consolidation for 2 months in DBS, and this is my personal story and my client story as well, because we trade the banks and we invest in it quite frequently as well. So this is what happened to DBS. So on the way up, actually, a number of my clients and we already took some profits, and we were actually looking to enter. So in May, looking at the sideways movement, so let me draw out the sideways movement for you. Which is here. It consolidated for 2 whole months. So in fact, some clients actually shorted because they were expecting a pullback. Pullback meaning they're expecting the price to come down. So why are they shorting the banks in May? Let me share some information with you. This is the 20-year seasonality, the cycles, like for the past 20 years, all 3 banks are bearish in May, and they are neutral in June. You can see that it's about 40 to 50+% in June. Hence, some of my clients actually went to short the banks in May. These charts show the percentage of bullishness in each month over the past 20 years. So you can see from the charts, right? In May, DBS is only bullish about 30%, UOB 30%, OCBC 30+%. So if you were to choose only one counter to short? Short meaning that you make money on the way down. Which counter would you choose looking at the percentage? Which one would you be more keen to short? Can you let me know in the comments? Is it DBS, UOB, or OCBC? Right, DBS 30 plus. Okay. So Jin choose 30 plus. So commonly people will look at UOB because it's the lowest. That means 30% of the time it is bullish in May. But let's see what happens if you like all three charts during this period. So let's start with UOB. So UOB, this is the start of May, right? So if it came down because of the dividend, and if it came up, and I know a lot of traders who shorted here, some got out here, some got out around here, this area. They made a little profits. So for UOB, you can make a little bit of profits. For OCBC, the dividend, therefore the gap down, and then there was a chance to short. So some of them went to short and into June. So OCBC and UOB, there was a short opportunity for a very short period of time. But for DBS is really another animal. So just now I've already showed you guys, right? It consolidates sideways. Very difficult to short, very difficult to make money on the way down. So my clients who short DBS, they fall into two different categories. They got out with a small loss or they are stopped out during the July's boom. So if you recall, I talked about the bullishness in the seasonality chart. July is very bullish. So bullishness in July is okay. It's playing out now. You can see now we're in July. So end June, I started to share with my clients just in case this bullishness really happened. So fortunately or unfortunately, it really did. And good thing is my clients actually had a stop loss in place. For some of my other clients, we were planning to buy, but the pullback wasn't there. So this is a personal story of our trading and investing during the past 2 months involving the banks. So what got me sharing with them, like, hey guys, July is bullish. It's not just the seasonality, but also I dug deeper into the SGX website. SGX website, in case you don't know, there is this thing called the Insti Funds Flow Tracker. So this was the one that got me on the alert to be thinking that, oh, not just the season in July bullish, but it is also supported by some data in the funds flow. So of course, the funds flow, let me show you some data. Okay, so this is the funds flow data. I'll explain more in a while. So just a disclaimer, the funds flow doesn't mean that you see there's a higher net buy, then you go and buy. Because past performance has no bearing on the future returns of the stock. So I hope you guys can understand that. So if you understand, can you please type a letter U so that I know that you are following? Thank you, PS. Thank you, Joe. Thank you, Sumi. Thank you, so long. Okay, so this funds flow, it gives you a sentiment, like whether it's bullish, whether it's bearish. So allow me to explain more. From the consolidation period, which is this period, May and April until June, which is early July, before end June, basically. We just talked about DBS. So you can see that DBS has a large buy for the Insti and retail added together. But for myself, I was very surprised because I was like, Insti, $495 million net buy. And so I backtracked another 9 weeks. This is actually 9 weeks. 9 weeks worth of data. This is also 9 weeks worth of data. So prior to April, I look at the 9 weeks and I realized that for DBS, the net buy was only 157. And yet the following 9 weeks, it was 3 times more. So this got my radar up. It entered my radar. I was alert. I thought I should tell my clients along with the seasonality. So these are the two important points that got me thinking that, oh, okay, the bullishness may come. But I didn't expect, to be honest, I didn't expect it to be so bullish. So far, are you guys following? Is the info useful? If it's useful, type a letter Y. Thank you, PS. Thank you, Mr. Lau. Thank you. Thank you, Jane. Thank you, Joe. Thank you, Colin. Okay. Do you all know where to find the data? If you know, you type yes. If you don't know, just type no, so that I know how many of you would like the data. Okay, 1, 2, 3. Okay, okay. Most of you don't know. Never mind. It's okay. After this webinar, I'll go and look for the website and then I will share it in the Telegram. Okay, next. So what's next? I've talked about the history and then now I'm going to talk about what's next. So this is how I value the banks. The breakout already happened. Okay, in case you don't know, the breakout already happened over here. Over here, breakout already happened. This is July. This is July. So next will be understanding the current price action and then we plan for the future. So a valuation metric I always use is the price to book. Okay, but before I go to the price to book, right, I just want to share with you the interest rate as well. So interest rate, you can see that the Fed funds, we are all expecting drop in rate, right? We're all expecting this. It's very closely tied to the Singapore interest, Fed funds, you realize, just that Singapore a bit choppy. So you realize that what happens is when the prices go up, the interest rates go up. The price come down, interest rates come down. So this is what happens. And that's also, so I want you guys to remember this. We are expecting the interest rate to come down. So where do you think the stock price will go? Up or down? Let me know in the comments. Okay, so Jane says down. Yeah, so let's remember the interest rate part, then we will zoom in to the charts on valuation. Okay, can you type letter C so that I know you can see my chart before I move on? Thank you, Dave. Thank you, Sumui. Thank you, Salong. Thank you, Shuning. Thank you, Ansat. Thank you, PS. Okay. So how many of you is the first time seeing this indicator? Let me show you this indicator. This is called the PB price line. How many of you first time see this indicator? If it's first time, just type number 1. Then I'll explain a little bit more on how you interpret. Okay, one. Okay, great. Okay, so price to book ratio, we don't just look at the price to book, we look at the price to book price, meaning to say you are looking at the fundamentals of the company and the red line is actually the 5-year high. The red line is actually the 5-year high. So instead of telling me the price to book is 1.5, 1.8, what does it really mean when we are talking about the stock price? So this indicator tells me what it really means when we talk about the stock price. So let me show you. This is the 5-year high. This is the 5-year high of the PB price line. So if you look at this, when it jumped up, I was very reluctant to enter. It continued up, I don't want to enter because I want to buy not at the high, at least avoid buying the high. I always tell my clients this, you may not be able to buy at the low, but at least you can avoid buying at the high. You buy at a reasonable price. How many of you agree that you should buy at the reasonable price? Type a letter R so that I know that we are all on the same page. Okay, thank you. Thank you very much. So in view of time, I will just use DBS as an example. But before I continue, can I ask if you guys like an analysis on UOB and OCBC as well? Because if you want it, then maybe after the webinar, I will share it in the Telegram as well. Okay, great. Yeah, because I understand that we book you guys until 8:30. I don't want to hold you up. So today I'll just use DBS as a case study. Thanks, guys. Thank you for your support. So with a long-term view and understanding the fundamentals and also understanding the fundamental valuation as well as the technical valuation, which I will share more later, we can consider a number of price levels when the price retraces. Let me shift back to my slides. Okay. So firstly, I just want to remind you guys that just now we talked about expecting interest rate to drop. So we were expecting interest rate to drop. Therefore, we were expecting the price to come back down. So that's the reason why we don't want to buy now. And secondly, we are also expecting not to buy the high, right? So we want to buy at a reasonable price. Reasonable. Okay, reasonable price. So now comes the planning. What are we going to do? What kind of planning can we do? I offer you three proposals. There are three kinds of traders and investors. One is the aggressive one is the conservative one, and one is the ultra conservative one. The aggressive one will do it this way. The aggressive one will have three different tranches. It will buy the first tranche at a higher level. And then when it goes to the next two levels, they will continue to buy second, third tranche. So the aggressive one, you'll buy your first tranche at your nearest support. The conservative one will buy at a lower support level. The ultra conservative one will buy at the lower support level, but this time he will split it into three tranches. So these are the three examples. Using DBS as an example, let me show you how to apply. In fact, today one of my clients actually went in to the I would say she's aggressive. I would say she's aggressive. So now we know that it is overpriced. So this is what we're going to do. These are my key levels, right? This is my first level, my second level, and my third level. If you are aggressive, right? If you're aggressive, your first level is around 37, which my client is. She went in at 37, and then she told me she want to go in at 36.5. For me, I'm looking at 36. And then the lower one is about 33.2, thereabouts. So understand that the key level is a key level, it's a zone, it's not one number, all right? So the conservative one, you will not go in at 37, you'll just wait for 36. And then you'll go in the second half at 33.2. And lastly, the ultra conservative, you will go in at 36, 33.2, and maybe even 32.8, thereabouts. So far, so good. Can you all understand the plan now? If you can understand, can you please type? Okay, Anna, I see your question. If you understand the plan so far, can you please type good so that I know that you guys are following. Thank you, PS. Thank you, answer. I hope this gives you clarity. Okay, let me answer Anna's question. Okay. So Anna asked if whether you will sell at current price to lock in profit and wait out for the lower price to buy again. That's a very good question. So you have to consider a few things. Number one, let me write it out for you. Number one, What is your budget? Do you have a budget? Number two, what's your entry price? If your entry price is at $10, $20, my advice is you keep that one. You keep that one, you have a budget, and then you go in. All right, and now I hope I've answered your question. Now it's already 8:27. I will take a few more questions. If you buy lower than the ask price, will your order get filled? Okay, Prem, this is talking about order types already. So bid and ask, right? Ask is where people are going to sell. If you want to buy immediately, you buy the ask. So if you place it lower than the ask price, you are actually waiting. Okay, Prem, I hope I've answered your question. Okay, so let me go back to my slides. So thank you very much for joining us. Please join the Telegram if you are available. Join the Telegram. I will send you one thing, which is the PB analysis on the UOB and OCBC, and also the second thing is also the Singapore Fund Flow Tracker website. And of course, Jack commit every earnings he want to give you some updates also. So do join us. Thank you very much for your time. I'm glad I made it, but of course, I cut out the other two banks. So thank you very much. Any further questions, you can email us. All right, let me type my email for you. Any questions, you can email us at qq_team@phillip.com.sg. Thank you, Mr. Lau. I hope that you guys got some clarity in terms of the planning. Yeah, because a number of clients actually asked me, like, what's next? Because it's very high. They couldn't enter. Thank you, Anna. Thank you, PS. Thank you. Thank you very much. Thank you. Thanks, guys. Thank you. Thank you. Thank you, Casey. Thank you, Jun. Thank you. Thank you, Kian Liang. Thank you, Anson. Thank you, Sumui. Thank you. Thank you. Thank you. Bye-bye.